and welcome to CNBC TV 18. I'm Malvika Jain and I'm joined by Sanjay Rishi, the President of American Express South Asia. Sanjay, welcome to CNBC TV.
Happy to be here, Malvika.
My first question to you is that, the new government, Arun Jaitley particularly, and the RBI are both keen to give a boost to the cashless economy. What kind of opportunities do you foresee for the credit card business in India?
Well, I think there are tremendous opportunities, and payments, credit cards as well as other forms of electronic payment, including prepaid cards and debit cards, are headed for a long period of growth. The government is committed to wiping out cash from the system because of the many inefficiencies cash brings about. India is a very cash-intensive economy, so there's a huge opportunity, and I think for the first time they are supplementing the measures that they've taken in payments to also involve the industry in a constructive dialogue on what might be done to accelerate the pace of payments electronification. So that's one. Two, most of the financial institutions that issue payments are now newly focused on leveraging payments to actually provide greater value to their core customer base, which is banking clients. That's a good way for them to retain them, to earn their loyalty, and to make more revenue. And as a result of these efforts, notwithstanding the relatively small size of the Indian marketplace in terms of payment transactions at point of sale, India is actually quite a sophisticated payments market. From the viewpoint of payment security standards, they are amongst the strongest in the world, starting from message confirmations for every transaction that you get. I'm sure you noticed, when you use your American Express card, you get an SMS message. You have second-factor authentication for all online transactions. You get a one-time password delivered on your mobile phone. You have chip and pin. So like that, the government and the Reserve Bank of India have done tremendous work in sending the message out that, look, it's safe to deal with electronic payments. The kind of innovation we are seeing in payment instruments, from the credit cards and the co-brand cards and the types of different varieties of cards that are available, the digital wallets which have just about come into the scene, they're pretty sophisticated, and they hold their own with the best and the brightest in the world. So it's pretty sophisticated. But here's the rub. If you look at the total number of cards in circulation, there's something like over 510, 520 million cards. If you look at the total purchase volume on those cards, more than $400 billion. But only a tenth of it, about $45 odd billion, is being used for transactions at point of sale. The rest of it, and principally debit cards, are being used for transactions to access cash. Now, this is not the old argument about people don't want to report income, because every use of a debit card comes from a bank account, which is fully KYC'd, which is absolutely white money. So what that's telling us is that this is a necessary opportunity to solve, which is to get more and more electronic payments in the hands of more and more people. But it's not complete until you handle the other part of the payments ecosystem. And there it's important to understand the retail structure of India, which is so different from the developed world. There are more than 11 million retail establishments, and a majority of trade is done in small mom-and-pop stores. Mom-and-pop stores exist in the US as well. They're called convenience stores. They offer convenience and they charge a premium. If you want to buy a bottle of Pepsi at a 7-Eleven, it's going to be probably more expensive than buying a bottle of Pepsi at a Sam's Club. In India, it's the other way around, because these stores are offering, convenience stores or kirana stores, are offering absolutely great value, personalized service, neighborhood convenience, because they keep the overheads really low. And unless we crack the code on card acceptance or electronic payment acceptance at this 95% universe, we'll never be able to get that explosive trajectory of growth.
How are you going to change this pattern? Because even in terms of e-commerce, you see that most orders are for cash on delivery and not payments which are made through the credit card or the debit card.
Yes, so that's a great point. The emergence of organized retail, and more recently the emergence of e-commerce, has really been an inflection point in the growth of electronic payments. And it's true that initially e-commerce companies had a very large component of their fulfillment through cash, but that is changing slowly. Cash is giving way to electronic payment instruments, credit cards which are being used, or debit cards at the time you make your order, but also at the time you receive the products that you've ordered. And I think the simple reason for this is that for the e-commerce companies, handling cash, storing cash, moving cash is expensive. So the combined efforts and the incentives that are being given to consumers to move from cash to electronic payments is making a difference. It's not going to happen overnight, but it's going to happen for sure. And the important point is that when retail starts to get into an organized format, when retail starts to go online, those become inflection points for the payment industry. That's a good thing. But the reality check here is that the Kirana store in India is playing a very important role in society. That Kirana store is not going anywhere. And the focus of the industry should be on developing solutions that enable Kirana stores to accept electronic payments. Now, if you want to achieve a growth rate of about 20-25% in the industry, which is what it's doing, and by the way, that's a very strong growth rate compared to the Western world. That's sustainable, that's it. But if you want to get a growth rate of 40, 50, 60%, you've got to have these transformative, disruptive solutions. And you know what? That growth rate is possible because less than 5% of total private consumption expenditure is happening on electronic payments. 95% is still cash. That's why it's a very cash-dominated society. So even if you project out 50-60% growth rate for the next several years, you'll still find that penetration level to be much lower than what it is in developed countries today.
But do you feel that the payment bank model can be a game changer in this
Definitely.
respect?
I think it's a great move on the part of the regulators to introduce payment banks, and I think that they could be disruptors. They've yet to prove themselves, but at least in theory, the payment banks, and especially if you can integrate a payment bank offering into your core value proposition, would be of great appeal. So we'll see how that plays out, and we're certainly watching the evolution of the whole digital wallet space with a lot of excitement, the future will tell what it tells.
Well, one of the companies, MobiKwik, which you have a strategic investment in, had applied for a payment bank license, but it somehow did not go through. So are you going to be looking at other companies which have been granted a license to sort of partner with, or you're just going to wait and watch?
No, I mean, we have a bank license, and we can issue all sorts of payment instruments. We can issue, except for debit cards, we can issue prepaid cards, which we do, and we also issue credit cards and charge cards, which is our traditional business. And we also have a loyalty program, but that's outside the bank. So, for us, we can do this, all of this ourselves. The investment that we put in MobiKwik was really to find a way in which we could bring a synergy through a partnership, in the sense of giving MobiKwik more customers that they can bring on their platform, and using MobiKwik's capabilities to get more customers for American Express. I think the final word is not out on payment bank licenses. This is the first round.
Right.
I think that this is the start, but it's not the finish. And if you talk to MobiKwik, I think their CEO Bipinpreet Singh said that he is hopeful of getting a payments bank license in the second round or the third round. And I think there'll be other payment bank companies also that will appear on the scene, and there'll also be shakedowns and consolidations that will happen along the line. But sending a message that you as a private company can participate in payments is an important message, and an important driver, I think, of electronification.
You have in the past said that entrepreneurship is something that's going to drive your strategy in South Asia. That is when you have taken charge. So when you talk about entrepreneurship, I do understand that you mean that it's not going to be just under the brand of American Express. There would be other companies and initiatives that you would be supporting. So 5 years down the line now...
in 5 years already?
I guess so. I think you took charge in 2010.
Time flies when you're having fun. That's what I meant.
So what's the future? What's on the agenda?
Well, I think, first of all, we're looking at India with a great deal of excitement. There's a tremendous opportunity here. We're doing very well. We're very happy with our performance. We also recognize that it's important to go where our customers go. And the Indian market presents special opportunities that we must respond to. And let me just talk about a couple of them. You know that 60% of the population is less than the age of 30 years. So unless you have solutions that address the needs of young consumers, somebody else will, and then it's going to be that much harder for you to displace the incumbent. So we want to become an inclusive brand. We want to go beyond the traditional positioning of American Express as a company which is for affluence and for businesses. That's important to us, and we will always keep that positioning. But we also want to expand and become an inclusive brand so as to attract more members into our franchise. That may not be through a payment product. That's why Loyalty Partner, which is the company that owns the Payback brand, which is called Payback in International, and Plenty in the US, is so important for us, because it gives us that upstream capability through which we can attract consumers into the franchise who ultimately will become American Express card members one day. That's what we hope. Now, we never do anything. We have a number of other payment companies and banks in the franchise. Actually, one other payment company, which is ICICI. We'd never do anything to create any conflict there. But there are opportunities for both of us. So that's one example. The other is that, as the saying goes, you have to go to where your customers are going, and they're going mobile, and they're going digital. So you have to have digital, and in India especially mobile, in your business case. With about a quarter of the phones now smartphones, what's happening is that about 70% of India's population is accessing the internet on the mobile phone. They don't have a desktop, which is a very different phenomena compared to what it is in the developed world. In fact, 45% of all e-commerce is happening on the mobile phone. Right. And you can see it in the GMVs of the Flipkarts and the Snapdeals and the Amazons. So unless you have solutions that enable you to acquire customers, to engage customers, and to get them to use their mobile phones for spending, you will never be successful in India.
Well, we are in conversation with Sanjay Rishi, the President of American Express South Asia. We're going to be back soon after this break.